Hello, glad you're with us. I'm Brad Satin with Smart Money Matters, joined today by Julie Hupp, the president of Aspire Divorce Solutions. How are you?
Great. Thank you, Brad.
Today we're talking about divorce and the need for a financial advisor, especially when there are complicating factors. Julie, I imagine the more money you have, the more complicated it could get?
Yes, always.
Well, let's talk about compensation for starters. I would imagine it's more than just a salary. Benefits can get complicated.
Yeah, benefits are very complicated, and the reason it matters so much is because income, which is typically reported on your paycheck, income is used in calculations of both maintenance and child support. So really understanding what income is a key component to creating your agreement. And so some of the things that aren't caught properly sometimes are things like deferred compensation or stock options, and those are things that complicate the calculation of income and where a CDFA can really help.
And you want to, of course, make sure that income is reported properly. There could be some concerns about money being left out, either just forgotten or in some cases hidden by a spouse.
Yeah, absolutely. You know, the hidden case, I mean, sometimes that happens, not as commonly, but it's really more the left out. And what I've seen just in general financial planning is a lot of times people don't understand all the benefits that they get. And so by looking at tax returns, by looking at particularly pay stubs and benefit summaries, that's where a CDFA can really help the couple understand what the real income is in the family.
And I would imagine owning a business or real estate could also complicate a divorce.
Yeah, the business for two reasons primarily is one is you're going to need to get a valuation of the business if it's kind of a good business and an ongoing entity, so that can be used, you know, as you're looking at all your assets. But the bigger problem with a business is a lot of family expenses are often run through the business, and that will reduce income. And because income is part of maintenance and child support, you really want to understand what are those expenses going through the business that shouldn't be.
Yeah, that makes sense. And finally, tax planning. I guess if you're not careful, the tax liability between spouses could be massively different.
Yeah, in most couples you have a higher income and a lower income in many cases. And so how you split assets can really make a big difference in the overall taxation of that unit. And especially when it comes to executive compensation, like stock options are a great example. If you have stock options being split equally and one wants theirs and the other, who is the higher tax payer, has to sell all at one time, that has a big impact on the family and on the overall taxes.
Yeah, no doubt. Helping us sort out the complications, Julie Hupp with Aspire Divorce Solutions. Thanks for being with us.
Thank you, Brad.
I'm Brad Satin for Smart Money Matters.